Thursday turned out to be relatively stable for crude prices. Oil continued trading upwards and received an additional factor for its further growth. Russia's deputy foreign minister announced the futility of further talks with the United States on the issue of security guarantees, thereby hinting at the completing negotiation process. And this means that Russia will most likely face additional sanctions, and the old world nations increased tensions over energy resources. The deficit has been supporting commodities for quite a long time, therefore growing fears may well enhance upside potential for oil prices. From a technical point of view, Brent crude oil futures continued moving upwards, posting the third straight weekly gain. During that period, the asset managed to add 22%. Now the benchmark is heading for the local high posted on October 25 and the level of $86.18 per barrel. Given its overbought status, Brent crude risks facing a rebound. However, if the quote consolidates above the level of $87 per barrel on the daily chart, it will have every chance of extending gains. The Russian ruble, on the contrary, was wound down by the news on Russia-US talks. The deputy foreign minister's statement triggered panic among investors. The foreign exchange market reacted to the prospects of a new tough sanctions against Russia with the capital outflows. And the Russian currency lost 2.5% of its value against the US dollar in just a few hours. The ruble began to fall shortly after the ruble-based MOEX Russian index collapsed. This means that foreign investors have closed their positions, and the ruble is expected to extend weakness in the near future. The dollar-ruble pair showed surprisingly strong speculative interest amid the negative fundamental news. In a couple of hours, the ruble was down to 76.62. This in turn brought the dollar into overbought territory and provoked a technical pullback. Now the price is trying to recover. The Russian currency may gain value to the levels of 75.50 and 75.00 rubles per dollar. Alternatively, if the pair consolidates above 76.70, the ruble is expected to continue its decline. In this case, breakout of the local high recorded on January 5 is possible. In the meantime, gold is still moving around the level of $1,830 per 3 ounce, although the asset is trading downwards. The precious metal is still seen by many as a safe haven asset. At a time of growing international tensions, demand for gold is perking up. Hence, if the United States again begins to threaten heavy sanctions in the near future, those investors looking for shelter from the unstable international situation may well shift their focus to gold. Gold futures have been trading near the resistance level of $1,830 per 3 ounce for several days in a row. Although the trading instrument is standing still, this indicates bullish market sentiment on the asset. Thus, the volume of long positions will increase if the quote consolidates above $1,832 per 3 ounce, at least on the 4-hour chart. Until then, gold is at the risk of facing a natural rebound. Well, there is a forecast for the end of the trading week. May your gains be stable despite uncertainty and geopolitical instability. See you!